if you can outperform with just straight up Bitcoin, why do we need all these derivative products? What's the thinking behind it?
Yeah, absolutely. And there are quite a few ways to access the asset class, and there continues to be more funds launching to provide different exposure. I think if you take a step back, blockchain is a revolutionary technology, and we're in the early days of this. So if you could flash back to, the late 90s and think about the internet back then, I remember dialing up on a modem, and now I can swipe my phone and have a package arrive at my door 25 years later. We're at the early days of this blockchain evolution, if you will. And so today, as you mentioned, Invesco has expanded our offering. We launched 2 blockchain ETFs, one that is broad, investing in the whole ecosystem, the publicly traded companies that are building this world, and then one that's more specific, ticker SATO, S-A-T-O, which is really geared at the companies building the cryptocurrency part of the economy. And again, there's many ways, as you point out, to access this new and emerging asset class, and we expect there to be a continual evolution of more product to allow clients more choice to access these markets.
Absolutely. John, and at some point, we're going to get deep into the world of crypto ETFs. At some point, the regulators are going to clear it. What happens to these products then? Are these just holding place markers for when that happens? What happens to these kinds of ETFs when we get that clearance? Yeah, not at all in terms of a placeholder. So we have an analog here at Invesco that we can look back at. We opened up the commodities markets and ETFs a number of years ago, 15 years ago. We also provide exposure to the equities portion of the commodities market. So you can buy a basket of securities that buy, Exxon and Chevron and Halliburton and those names. And yet we still have the direct exposure if you want to buy oil futures or gold. And so both exist because they have different return patterns and different profiles. And quite frankly, they're built for different investment purposes within a portfolio. And so fast forward 10 years, these products will be as relevant as they are today, even as more efficient ways to access the physical currency continues to build.
John, why did you guys decide to put 15% of the holdings in one of these ETFs in the Grayscale Bitcoin Trust? We know Grayscale wants to convert into an ETF at some point as well. Is there any conflict there for you guys?
So both solutions have a 15% investment in a fund that is directly invested in Bitcoin. And we think that to participate in this ecosystem, you need the direct exposure in some capacity. And you also need all of the companies that are building the infrastructure around this. And so if you're really getting a true play on this space, we think that there's a need to have some exposure to the physical currency as well, or to the physical capability as well. And so both SATO and BLKC hold that investment at about 15% of the fund.
So what do you think about the SEC's moves then? There was a lot of talk this week about potentially even seeing an ETF within the next 12 months. Do you expect that to be the case, that we can see pure Bitcoin ETFs sometime soon?
So look, there's tremendous focus on the first Bitcoin ETF, physically holding Bitcoin, and we're working on that with our partners at Galaxy. That's not the final destination, though. Again, if you fast forward out further, we see a full shelf of physical capability, different combinations of coins, different weighting methodologies, again, all providing different return patterns. And look, this is a technology. It's 12 years old, right? And people think of this space, we all think in terms of years, but if you look at this in terms of the network effects, we're starting to see the financialization of this space as the next network effect. And so there's no question whether there'll be an ETF here at some point. It's just a matter of when.
Going broader, John, in the broader market landscape, what happens when we have a week like this week? Big volatility, then a huge bullish reversal. Clearly, we're exposed to geopolitical stuff like an energy crisis, like the debt ceiling limit. What are you noticing sort of in terms of flows and positioning? And then tie that back into crypto and like where it moves with at this time.
Yeah, so you've seen an interesting move specifically in crypto over the last week, kind of diverging from the macro environment with a pretty good rally here from 45,000 up to what we have 54,000 right now. Look, we believe in long-term investing and the products we build are for the long-term asset allocation. I think the great thing about ETFs is you can buy it long, you can sell it short. There's options available on the product. And so we see so many different investor types utilize these products for exposure. And the flows don't always translate directly into the view in the particular market. So we continue to see strong flows in our commodity range and our broad equity capabilities this year. And that trend is persisting even in the recent weeks with the volatility that you've pointed out.
What are investors using crypto for in this environment? Because it's fascinating to see tech up, crypto down, crypto up, tech down. I'm wondering what purpose it's serving for many of the people that are buying it right now.
Yeah, so we're certainly hearing from investors the interest in this space, and again, that's really what we're responding to with these two equity capabilities, and we've talked about continuing to evolve that product suite. Look, it's really about a return pattern that, as you pointed out, may be divergent from traditional asset classes. This may be, the first new asset class in around 100 years that we're seeing evolve right in front of us. And so there's clearly a play on scarcity. There's an inflation topic. With what we're seeing with the government spending right now, there's a play around that. There's tremendous interest in this space. And what we also see is there's a tremendous need for education. And that's what we're most excited about, is partnering with Galaxy and others to educate around this asset class that is quickly emerging.
Really quickly here, are investors souring on growth ETFs right now?
So we continue to see strong flows in some of our growth products like QQQ. It just reached $200 billion in AUM. We're not seeing that trade sour in our ETF lineup. We are seeing increased flows in value, but we continue to see the growth trade in terms of flows into our suite.